Trading models. All right. So now this is really the stuff that, like, let's say when people talk about patterns, this is basically how you're going to view the market, and you're going to be able to see exactly what's going on, and you'll be able to basically name it and identify it and be able to trade it. Of course, these are the trading models that I use on a daily basis and that I just call my A class trades, and then you'll be able to name them yourself and then so forth. So, what you see in front of you is what I call, well, what everyone calls a daily bias, but this is basically what you see go on a day to day trading in a day to day trading day. So obviously, like I said in the earlier in the earlier lessons, power of three, you got manipulation, you got accumulation, manipulation, distribution, as you can see here. And then in the bottom chart, you've got accumulation, manipulation, distribution. I'm showing you this so you can see for yourself that these stuff are executed and they happen on a daily basis. So this is an A class trade. That's an A class trade. That's a buy A class trade, and that's a sell A class trade, and that is also a sell A class trade. This here, oh sugar, this here is a weekly one. So now we still got the same system as the power of three. We've got accumulation, manipulation, and then distribution. But all we're seeing it is on a bigger scale. So sometimes you could do it on the daily, or you can even see it on the weekly. So you can trade, let's say for example, sometimes what you're gonna see is the Tuesday high. Tuesday is the highest or the lowest, and then it's selling off. Or Wednesday as the highest, and then it's selling off. Or for example, if you're in a buying situation, Tuesday as the lowest, and then it buying off, and then Wednesday as the low at the lowest, and then the market buying off. This is also another A class example that I would use for my weekly bias to determine, okay, how am I going to get in the trades? Where am I getting in and where am I getting out? And then finally, we've got order blocks and the supply and demand A class trade. As you can see here, we've got the swing high, swing low. We've got the break, which was the manipulation. We've got the when it comes back down, and then we've it's now created the order block, as you can see. Then it's shot back down, and it's now, as you can see, it's accumulating liquidity, and we've made the high for the liquidity grab, gone back up to where the order block is, and shot back down, and that is how you grab an A class sell off. Then the same thing over here. We've got the swing low, the swing high, the swing low again to manipulate people at the market. These will grab all the sellers quick, the early sellers. The market will shoot back up, create an order block, make a swing high, equal highs, equal lows, build in liquidity for us, and then take out all the buyers that got in late, should I say, and then hit the order block and go right back up in our direction. So I'm basically just showing you what I've taught you and exactly how it's executed and how you can see it for yourself. And then so I want you to basically, when you're in the charts, I want you to be able to visualize these trades that I've shown you, these trader models that I've shown you, and then take them and put them in the charts for yourself. And as well as you're trading, you'll probably find some more patterns. You'll probably find some more, what's the word? You'll find your own trading models, and I want you to grade them. So what I mean by grading your trade is what trade works for you the best, what trade provides you with profit, and what trade gives you a peace of mind. So the trades that I've shown you now, these trades have given me a peace of mind. These trades provide me with the most profit, and I can all class them as A class trades. Of course, I have B class trades and C class trades, and they don't always happen, and I don't always execute them to the best, but that's why they're B class and C class. My A class trades, I can have the most confidence in them, and I can risk a little bit more because I know they're my A class trades. You don't necessarily have to risk more, but if you trust the trade, you can do so. So now, validating and invalidating trades. This one is really important because this saves you trouble, regardless of if the trade is an A class trade or a B class trade. You can use this now to stay out of trade, to save yourself some money, and to give yourself that extra level of patience that you need. So before you get in a trade, this is what you should be saying to yourself or checking for yourself. Is there high impact news coming out in the next 10 minutes? If so, be patient, because you could possibly get manipulated out of the market, and you do not want that, because high impact news is very volatile, and liquidity on both sides can be taken in less than a minute or 5 minutes. Has liquidity been taken? So this is a different trade setup, or a different day. Has liquidity been taken? If liquidity has not been swept, then we cannot get in the trade. We need our liquidity to be swept to be trading. We do not want to be traders that are liquidity or getting too early. We want our liquidity to be taken, and then we get in and we ride whatever trend we're riding. Consolidation stage. You don't want to be in a consolidation stage, because that is liquidity. Liquidity is building in a consolidation stage, and manipulation happens right after the consolidation stage, as well as the accumulation stage. So we don't trade that. We stay away from that stage, and we focus on the other stages where we can accurately get into the market and be pleased with our trades, rather than having our heart racing and emotions in a trade. Higher time frame POY has not been reached. This is really important, because this helps you with your sell side or buy side liquidity. You will know when your buy side or sell side liquidity is going to be taken, because it's reached a POI, which is on the higher time frame. Once you get that, you can either get a reversal, or you can get a breakthrough and a retest. Once you see either or, you can then accurately trade and get in effectively. Lower time frame trend isn't with my higher time frame bias. So what that literally means is, if the higher time frame is selling off, you shouldn't be getting into buyers. You shouldn't, because regardless of what you see, the higher time frame is always stronger. So we need to be patient. You could be in a pullback, and the pullback doesn't last that long, even though you can get in, but that's counter trend trading, and I do not want no one to be counter trend trading. You need to be focusing on the higher time frame trend and working with that trend, because that is where most of your money is going to be made. If you are part of the trend and you can see it's buying, carry on with the buy. Wait for a pullback and then you get in. Don't just rush in because you can see that it's about to sell and you're just trying to get quick money. Quick money isn't the way. You will make a lot of money in this game, but thinking that it's just going to come quick because you can get any buy and any sell is incorrect. And a mid-trend entry with no pullback, you're literally going to wipe yourself out by doing this. Every beginner does it. If you get in with no pullback, regardless of what the trend is, regardless of what the trend's saying, you will get taken out and you will be used as liquidity. So you now need to wait for a pullback. If the trend's pushing up, wait for a pullback, wait for a retest of a level that you've marked out, and then you can get in. Get in with you predicting the market before the market even does what it needs to do. So if it's now pushed up and it's pulling back and you've got a level it taps and pulls back to, then you can get in. Don't just be impatient and rush and then expect the market to go your way, because no, that's not what's going to happen. What's going to happen is the trend will carry on going, or the trend will or the trend will reverse, and then it will pull back further, take out your stop loss, and then carry on going. You want to be in the trend. You want to be in the right side. You want to be on the market's favor. You don't want to be against the market. So think about that, and think about your trades, the next trades that you're taking, as well as what would really help you is all the losses you've taken. After learning the lessons that you've learned today, or over the space of the week or the next few weeks, look at what trades you've lost on, analyze them, and then tell yourself, okay, what grade is this trade? Why did I take this trade? And why am I taking this trade? And what could have went better with this trade? What could I have done different? Did I apply a stop loss? Did I not apply a stop loss? All these things are good for your trading journal. So do that. Message me if you want to message me, and then let me know. Now let's get on to the final part of the masterclass.